Hello, today is Saturday. It is January 14th, 2023. Welcome to the new year. Today's report is titled 2023 Stock Market Starts with a Character Shift. And this is your weekend report. Hi, this is Jonathan Gurney, Portfolio Manager of Gurney Financial. This post is for informational use only. The views expressed are those of the author, Jonathan M. Gurney. That is me. It's not intended to be relied upon as a forecast, research, or investment advice. It is not a recommendation, offer, or solicitation to buy or sell any securities or to adopt any investment strategy. In short, I'm very vulnerable by doing these videos because I show you the good, bad, and ugly, whether it's good or bad. This week was a tough week for us, but I'm being encouraged because I'm actually seeing some good things under the hood. I placed some positions that were positive on Friday and then went the opposite direction. It's just the way this market, it's a tough penny earned right now, but we're seeing some good things under the hood. So let's get to the charts. Okay, let's start with the performance first. This is year to date. So this is a complete shift in character, as the title states, a complete shift. We're starting to see some things, and I'll get to the list of what I'm seeing, but these are good things. We're getting broad-based accumulation. Okay, so there's the indexes for the year to date so far. This is a complete shift. You got to understand, this is not just, this may still be a fluke, but that's what I'm trying to look at and say under the hood. What am I actually seeing? So for the week, what we're seeing here is a rotation. So some of the areas like XLY, which had terrible strength the entire year last year, is starting to outperform. So we're kind of getting a shift to some of these beaten down value areas, and we're starting to, like XLC was the same thing. The lower the score, the worse the general trend is. And so we're starting to see some of these, with the exception of materials. Materials is still a beast. But XLC and XLY, discretionary and communications, were beaten down, whereas a lot of the value areas really, they did okay, but we're seeing a slight rotation. But so in short, participation is very, very good. That's what I want to see. Okay, so I'm going to bring up the 5-minute timer to keep me on track. But I'm just going to be blatantly honest with you. You see the S&P 500 like Tuesday, Wednesday, Thursday, Friday, and you think that there's not, you just see the end price and that it's easy to trade. It is not easy to trade. This day started down 2%, not 2%, it started down 1%. This day started down 1%. So we're at a key level, and I'm going to show you those levels. So let's go over the positives first. Okay, so you're like, Jonathan, how did this happen? I'm actually placing a protection at key levels, saying we're getting overbought. Again, Friday morning, I would have been positive. I could not get out because the market was not open. I got the move exactly what I wanted, but the market was not open, and before I could press the button, the market moved basically 1% and made us negative for the week. It's very difficult. So if you're seeing this and not understanding how difficult it was, these days both started down 1%, but this is a change in character. We got to be objective about that and say, listen, dips are being bought regardless of the news. So let's go over the pros and cons list. So last week we discussed, hey, we're overbought and risk reward is not good. It's the same situation here. It's the most overbought since August 2022 on a short-term basis. So let's get to the positive. Number one, bank earnings were lackluster with poor guidance in general. Some were okay. But the market still rallied. This is a change in character. Big data, big headline data is mixed and is getting bought on dips. So things like inflation, I looked at that report and like, I'm not sure how to interpret it. I think the general consensus is that it's good enough or low enough that the market can do well. And so that's a change in character. If there was any doubt of negativity last year, we tanked. And we did tank. That morning we did tank, and then it rallied and squeezed hard. So we are seeing a complete shift in character. And I want to point that out. So we are seeing encouraging signs today. This week, unfortunately, did not work out well for us. I think you'll see why I placed a trades that I did, but I think the market's starting to really prove to the general public that, hey, you might want to get on board here because there's a lot of participation here. So again, a week is not a trend, a day is not a trend, but we are seeing some positives. Beaten down sectors in communications and XLY, like I showed you a second ago, are getting bids. The most hated names are getting bids. Yields in the dollar had big down weeks, often a positive for equities, but can it continue? That's what we're going to find out. We have a lot of data coming out across the pond in Japan as well. Trading setups such as triangles and bull flags, this might be over many of your heads, but it's a setup that I usually like to see. And if those are working, good probabilities for upside continuation. These did not work very well at all in 2022. It would fake above and then scream down. Both these setups, bull flag is basically sideways movement, and last year sideways movement went down. This year a bull flag so far has been pretty decent. The one question that I still have is, can breakouts hold? That's the one thing that's still a little bit iffy, but it's still positive. Still doing okay. Large participation under the hood, like I said, many stocks doing well. Great breadth. McClellan Index, the highs versus lows confirming the MACD cross. I'll show all this to you. The VIX volatility crush. So we had a huge decline in the VIX this week, which means volatility is decreasing. Even when the market was down 1% or so, the VIX was not freaking out, which shows that, hey, people are not panicking anymore on these dips. They're actually buying them. That's a complete change in character. In short, volatility is decreasing. Again, all of these things are positives. We've been here many times before, and we got smacked in the face all of last year, and that could still happen. That's why I'm in protective mode right now. But I think in time, this could lead to very, very good things if we get continuation. That's going to be key this week. So it is really starting to prove to me that I might have to shift this position that I put on Wednesday and Thursday. They're great trades. I would do this every time, but the way that's acting right now, it looks like I'm going to have to take this position off. And soon, I'm not going to chase a move and get FOMO, but it does look pretty good. I'm not a big valuation guy, but if you need a rhetoric for potential value stocks to continue its outperformance over the mega cap growth like Google, Apple, and Microsoft, those names kept us afloat in 2021. They died in 2022. And the thing is, they died, and look at the valuation. So if you don't know, it says, Ed says, it's more than FANGMAG, which is Facebook, Amazon, Netflix, Microsoft, Apple, and Google. Okay, so if you don't know what that acronym is, there you go. Those big names, median PE, price to earnings ratio of growth stocks in our universe is 113% above the long-term mean, meaning they're saying valuation is very, very high for these stocks. And I frankly agree with that. I don't agree in putting a valuation saying they can't go higher, because they definitely can. So I'll be honest with you, I'm not a big valuation guy. I'm more of a trend guy. What is working and what is not? QQQ, which is the NASDAQ 100, is the weakest index right now, which was complete opposite all of 2021. Okay. Meanwhile, the median value stock is 12% below the long-term mean. And so we're seeing this shift. We're seeing value outperform growth. And it's confirmed across the pond. It's confirmed. World stocks are they're doing much better than our stocks, to be honest with you. IWM is doing quite well as well. So good things could be ahead. Concerns. We are short-term most overbought since August 22, hence why I put on the short. Overbought at a key level has not meant good things for this market in the past, but it is starting to prove that it could be different this time, and I'll show those to you in the charts. So overall, the downtrend line was a magnet, and I'll show this to you right now. So, okay, so there's sectors. Let's go over SPY, XPX. Okay, so this blue line, this is the S&P 500, okay? This is the downtrend line. We've been trying this for over a year, trying to break this line. Look exactly where we closed. It's not a coincidence. The technicals matter. No matter what people tell you, technicals do matter in this market. It was a magnet to 4,000. Again, this morning, I wanted the target to take a target at 39 and get out of my short at 39, like 35-ish. It got there, but it rallied before the market opened, and it just, buyers came in right away. So it's tough. I wish we would have tested this gap and this gap. This is around the 39.10, and we still could. I mean, that would be a really good test. And I think this support here at these levels could bring in some good things. So in short, the long-term trend is actually still down because we're downtrending still in the 200-day moving average. But many institutional investors will undoubtedly begin adding positions when the 5-day crosses the 200-day, this red line. So we're at a key level. I think if you look at risk reward here, let's switch screens. Risk reward, is it good? We are at a key level and we're overbought. Okay, this is my favorite time frame to look to see, is risk reward good? It doesn't mean it's not going to go higher, but is risk reward good? I can't buy that, but this is good. Higher highs and lower low, higher highs and higher lows. That's a good thing. Okay, so this is the S&P 500, different time frame, but we're overall cupping here. This could continue, but we're just a bit extended. Hence why I did not panic sell into the close. So we had a big squeeze. It magneted to 4,000. Doesn't mean it can't go higher. It very well could, and I will get out. But I'm still a little bit on edge to say, can this be real? And so far I'm seeing it, and it's proving a lot of good. So I didn't want to panic sell because a lot of times true colors can show the next day. So overall, things are positive, and that's an encouraging thing. This is across the pond, Vanguard, all world ETF. This is a huge move. Okay. We are overbought though. So we're at key levels and overbought, which concerns me. We might need it some sideways. But overall, things are, again, nothing I'm saying is negative. The McClellan Index, the cross, again, are we going to stay in this range? This is the first time we had not gone extremely negative into the RSI on the McClellan Index. Or are we just going to stay in this tighter range? More consolidation might be more beneficial for this market. But again, people are getting extremely bullish. We got to be careful not to chase, but also we don't want to miss a move. To me, the big tail is going to be this, okay? Can the QQQ, which is the big names, the Facebook, Amazon, Google, you get it. Can those names continue? You're like, Jonathan, it's done pretty well. It's doing okay, but can this help when IWM needs a break? IWM is small caps, and this has been a rocket ship, and I've been on this, but it's when this is going to need a break. I mean, that's a huge extension off the 5-day moving average, okay? But there's nothing negative about this, but it's still a big extension. So what's interesting is it is low volume. So, but the biggest rallies always occur in low volume, so I'm not going to make that a negative thing. It's just usually right around here we get a little bit of a pause, and it would be healthy if it did happen. The market doesn't care what's healthy. This could very well get chased. So again, we're seeing a lot of good things. Another good thing, the dollar is tanking. It's right at a key level. This is like an 8-year time frame. Below here, things have meant very good things for the market. So some very good signs objectively. Okay, here's the S&P 500. We did just clear the 200-day moving average. Can it hold? We're pretty extended over the 5-day moving average. But again, short-term trend is up because, number one, the 5-day moving average is curled up. and many of the other moving averages, including the 50-day, is up. So it's going to take some time to work through this. It's not going to be fun, I can promise you that. But overall, the next support that very well could happen, we actually tested 44,005 on Friday and backed off a little bit into the close, little weak hands. 4,020 could happen. But again, this downtrend line, we closed right at 4,000. It's a complete magnet. It's just the way it works. One more thing, what I wanted to show. Number one, the put call ratio has remained low, so people are actually kind of buying into this at this point. I think still people are very negative on the market, but people are buying into this. So the National Association of Active Managers still lowly invested, not hard invested at all. So this, I'm interested to see if this starts to get chased. New highs versus new lows, meaning the number of new highs in the NASDAQ. This is new, okay? If I show you the chart, look at all these times during the big red. New lows were definitely in trend. Even on all these rallies, new lows were still occurring. So people are like, this is not a real rally, not a real rally. But look here, we're rallying, and this is the first time in a long time new highs are occurring. So that's very good. Same thing with the New York Stock Exchange. I'll rest my case there. So in short, the summary is this. There's a lot of headlines coming across upon that could make or break whether we bolt above this or stay below, but there are some good things under the hood. I understand it was a negative week and you're frustrated at that. I'm very frustrated as well, but you can't blame me for at a level this that has been rejected and been like an 8 to 10% dip almost every time off this. You can't blame me for trying a good risk reward trade when everything was overbought. So I understand many of you are frustrated, and I am frustrated as well. Again, Friday we were positive 0.3% before the market opened. Couldn't place a trade. Market was not open. So not an excuse. You got to move on. But overall, I'm seeing some good things under the hood. And that's very, very encouraging because it's been a long time since we've seen that. Okay. So overall, I want to bring this up. So again, take this with a grain of salt, but there another positive sign to say for the week leading all sentiment survey into the sentiment survey, the S&P returned 4.6%. The bull bear spread is still negative, meaning there's still a big spread to the negative side. Still no belief in the rally. This happened several other times and led to very good returns every time this trigger occurred. Okay, so we're seeing some good things under the hood. So kudos to Matt. Thanks for that great work that you did. Okay. And this is what I showed you earlier. So kudos to Ed. We're going to cut it off there. I think we had plenty of detail, enough that gets us into it. Again, breath is good. When the trend is good, don't fight it too long. Again, I am short for a very short period of probably 1 to 2 more days to see, can this be real? And so far, it is definitely proving to the upside. It's a complete shift in character, something we have not seen most of 2022. Good breadth and the stock market going up. We had many rallies last year, but not confirming breadth. So good things ahead, I'm hoping. We'll see. I'm going to protect short term because the risk reward is actually better in that favor short term. But the trend right now, short term trend is up. Long term is down. It's kind of a tough situation, as you can imagine. So thanks for your trust. We're going to continue to grind. We'll see what happens this coming week because a lot of big news across the pond. Even when our market is closed Monday, across the pond in Japan, there's some big data coming out. So it could be a huge fake out to the upside and really scare some people, and nobody can do anything on Monday. So it could be tricky. I've seen it happen many times. I'm not going to say that that's going to happen. It could also go to the upside. That's always a possibility too. So thanks for your trust. We'll keep grinding. Kind of an update. We're still discussing with that asset manager to bring him on. It's still very interesting. We're just getting to the final kind of negotiations and how this is going to work as a benefit to both of us. So thanks for your trust. I know it's been a frustrating road, but be encouraged that these signs that we're seeing is good. And I'm seeing the trends. Like I just have to buy the trends. The detail and the analysis is not the issue. I need, when X happens, I need to trade. And that's something that I'm working on. So just being vulnerable and realistic with you. Thanks, guys. Have a great weekend. Bye.